Good morning, traders. It is Sunday morning, December 10th. I'm getting an early start on my video. We're going to go through our last pick, see how it did. Then I'm going to show you something different. I'm going to show you how to actually mine for stocks, how to find stocks that might be attractive to you and that fit exactly what you're looking for right now. So let's get started with AMD. This is the pick that I showed you on Friday. Incidentally, Friday morning, before the jobs number, I did a video recording. You should watch that one. I went through all the reasons that I believed that the market was going to break out to the upside. That's how we've been positioned since mid-October. We're looking for that capitulation low. We were looking for that year-end rally, and man, did we get it. I still think we've got plenty of upside. We'll get into that in just a minute. AMD, I really like the price action that I saw last Thursday. This long green candle closing on its high. If I put up our automated trend lines, I loved this breakout right here. And you can see how there were a number of different trend lines converging at basically the same point. And in all three instances, we were able to break out on very heavy volume. That's always how we like to break out, on heavy volume, closing on the high. So Friday, we had a jobs report that came out. I was expecting a nice positive reaction to it, and we'll get into that right now. So AMD, you can see the stock was able to finish above the close from Thursday, and I view that as positive. We're getting follow through on this breakout right here. I think AMD still has plenty of upside. So let's take a look at what the market did. We have this resistance right here. This was the prior high of the year back in July. Looky there. We broke out to a new high of the year on Friday. And I suspected that this was going to happen because I'll go through this very quickly, because if you want all the details on why I felt the market was going to break out, you have that information already in the Friday video. 3 months to sell off, choppy, stair-step fashion. Once we hit that capitulation low, look at how quickly the market ran up to the high. We've got material news in that the Fed is likely to pause in December and January. We got good news on the CPI front. Friday, we had a decent jobs report, 199,000 jobs created during the month of November. That was a really decent number. The issue on Friday was that hourly wages went up 0.4%. That's the largest input cost for manufacturers and for companies. It is inflationary. And I had mentioned in my comments all last week that I was less concerned about what the overall employment number would be, and I was more concerned with what that wage component would be. So came in a little hot. Is that going to sour the market? Is everybody going to get all freaked out because we had one hot wage number? No, I don't think so. This week we're going to get the CPI Tuesday. That'll be a very important number. That comes out before the FOMC statement on Wednesday. Wednesday, the Fed is likely to splash cold water on the market. Hey, we're starting to see some abatement in inflation. That's good. We like that. The economy's robust. We're going to stay flexible, and if we need to hike, we're still leaving that open. But for right now, we're watching inflation, and if it continues to come in, then perhaps we won't need to hike rates next year. But what they certainly will do is they're going to make it clear that they got inflation wrong in 2022, and they are not going to repeat that mistake. So for all of you who are out there expecting Q1 rate cuts, forget about it. The market's just happy that the Fed is not going to be hiking rates right now. The pause is what they're going to be focusing on. And that is why we've seen these big gaps higher. We'll also note that there is not a lot of volume. As I mentioned Friday, low volume is not bearish. It's not bullish either. So when we don't have the volume, we have to go with what the price action is telling us. The price action has been very strong. Asset managers gap up, gap up, gap up. Not a lot of volume on these gaps up because all of a sudden you get this big move higher. Well, asset managers are trained, they're conditioned not to chase. And so they sit passively on these gaps and they wait for a retracement, which almost always comes. Well, the dip never came. And now they're getting concerned that they're under allocated and they've got to put some money to work. And you can see how the bid has gradually increased all along the way because they're getting anxious. They didn't get that dip. So they start bidding higher and higher and higher. And that's why I felt that Friday, no matter how the jobs report came in, if it was generally in line, which the absolute number was good, people have jobs, that's a good thing. The wage component was a little hot. I'm going to go into the 5-minute chart because we were looking at what was happening before the open, and this is the price action that we saw. That's the actual jobs number that came out at 8:30 Eastern time. You can see the initial reaction, negative. Whoa, we don't like it. A little too many jobs, but mainly it was the wage component at 0.4%. So they sell it off initially. But then you can see buyers came in, and they were like, yeah, you know what, this is just one number. We still kind of like the market. And we get these nervous jitters before the open. So this is already a sign that we were not going to see go gangbuster price movement on the open, which is good for us because we don't want to have a gap and go to a new high of the year where we're having to chase, or sit on our hands waiting for a dip. So I viewed this as good. You know, we're going to get some mixed price action on the open. And so this was the early tell. So let's go back into the 5-minute chart and take a look at what actually happened. So we've got our gap down, okay? And now we're starting to percolate a little bit. We're starting to fill in this gap. All right, we're able to hold this long green bar and then blam, look at that nice long green candle. Hey, that was an instantaneous gap fill. That looks bullish. And this candle comes in and it tests half of that long green candle. This one was still okay. No problem with that. In fact, we finish as a bullish hammer near the high of that long green candle. So in here, I'm thinking, yeah, this looks pretty good right now. You know, I'd like to see more volume. Didn't get, you know, nice big volume on the open, but all right, let's see what happens. We had some nervous jitters before the open. This long red candle kind of came out of nowhere. And when I saw that, I thought, yeah, didn't care too much for that because we retraced more than half of this long green candle. What does this red candle tell us? What would we have seen if buyers were super aggressive? That's the kind of thing that you have to ask yourself. These candles tell you a story. And so in this particular case, the story was the bid's not that strong because sellers were able to come in and whap that thing right back down. If buyers had been aggressive, you would have seen this right after this. So move that over a couple of bars and you would have seen a nice long green candle. Maybe a little pause, another nice long green candle. So you remove these 2 bars right here and shift everything left. Yeah, that would be a much more bullish tone. I've also stated, and I stated Friday, I don't really want to see these long candles. I don't want to see that instant gap fill in these long candles because long candles like this can easily be retraced. What I would prefer to see is a gradual march higher. Tick, 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 nice, solid, smaller green bars stacked consecutively. And I posted a chart and I said, this is the pattern I'm looking for. I posted it in the chat room before the open. Well, first we had to go through this volatility and this bid check for that to eventually settle in. So now that you're taking some bullish positions because we've got a new high of the day, we're challenging the high of the year. You get this long red candle. We never like to see those, and that is pretty much, if you consider the opens and closes versus the wicks and tails, that is a bearish engulfing candle. Prefer not to see something that long up here. Now you know that there's going to be some selling pressure and some nervous jitters. So we are not go off to the races. If you're looking for an entry point for your trades, be they day trades or swing trades, right now you've got starter positions on right here. You want to participate because we're going to challenge that high of the year. But when you see these candles, okay, I'm back on my heels. Am I in panic mode right now? No, I'm just starting. I'm just getting started with my positions. So we have another long red candle. Geez, that's not particularly bullish. So all the gains that we had were given back. All these gains were instantly given back. Oh, that's okay. Well, we jump right back up. Now we've got a lower high double top and we've got these long red candles. Am I freaking out? No, I'm not. I'm leaning on this. This is what's important. I am trying to join this. So if you're over leveraged and you were FOMO Joe, oh my God, we're going to go to. Now, here, you're going to get scared shitless. You go, oh my God, I did it again. I rushed in too soon. Oh, double top. Lower. Oh my God, we're testing the low of the day. I'm wrong again. Puke everything. Bail. Geez, I can't believe I did it again. Calm. Control. Know the long-term D1 market trend. You've formed your thesis. You have your opinion of why you believe the market is going to break out to the upside. So this is nothing more than a bid check. It wasn't the perfect Goldilocks number. So at a high of the year, you're seeing some resistance. Okay, so we pull back, test that opening price level, and now off the low, we get this nice, big, long, bullish engulfing candle. We get a nice 1OP bullish cross and the pattern that we were looking for. So if you crop all of this nonsense right out of the picture and you shift everything left, so let's do that. So this is your gap down. Okay, probe for support, bullish engulfing candle. If this is how the day would have started off, you wouldn't have had any worries because you never rushed in. You didn't have those long green candles to excite you, so you didn't get overextended on the long side. We didn't do that anyway. There was no reason to do anything more than a starter position. So now, if this is how we started the day, and you get this long green candle, and now you've filled the gap, hey, I'm getting a warm fuzzy right now because we're ticking higher. And I'm able to find the stocks that I really like. By the end of the day, what happened? Folks, we got a new closing high of the year. What am I expecting this week? Gee, Pete, we've got the FOMC meeting and we've got the CPI. This is only going to add pressure to the asset managers, okay? They're trying to get long, they're under allocated, they weren't able to get any size off in here, they were waiting for a dip that never came. Investors are going to be super excited to open their year-end statement, seeing that the market is at a new high of the year. Asset managers are going to be worried that they're underperforming the benchmarks. They're going to be worried that they are underperforming peers. So they are really going to be worried Tuesday if we get a really good CPI number, because that will push us much higher. And then, I've already missed that. Now I got the FOMC statement. What if we get another big push higher after that FOMC statement? Well, then I'm really screwed because I have been left in the dust and I have not allocated enough money. What do asset managers also know? So now put your investor hat on. Are you going to be more inclined to put money into the market when the market is making a new high of the year? Yes. So we can expect asset managers to be buying because they're going to be anticipating that investors are going to be shifting more money into equities. There's going to be inflows. When they have inflows, they have to buy, they have to place that money. So I believe Monday, you should see a little follow through, upward bias. Again, asset managers in there going, I can't risk having a big, good reaction to the CPI because I'm under allocated. I got to get some stuff off Monday. Not a big, heavy volume day, just a generally positive tone with a tick higher Monday to distance ourselves from that previous high of the year. It's going to put pressure on them. Tuesday, am I looking for a big drop in CPI? Not really. I just feel that risk is to the upside right now for asset managers, and that even if the number comes out in line, there's going to be some upward pressure for them to get long before that FOMC statement because they can't risk having a big positive reaction to the FOMC and them not having enough money allocated. And so that's why I feel that any breakout from here, you are going to see the volume, and you are already seeing that volume increase. So be long, folks. We've been long in here. We've been building our longer term swing positions. We've been trading from the day trading from the long side. We've been doing the same in here. And now that we have the breakout, we can start adding to our bullish swing positions. And that was what I suggested everybody do on Friday. So take a longer term perspective. We've got nice year-end strength, and I don't believe that there is anything that is going to sour the market between now and year end. Okay, well, some of you might be a little bit more nervous still about this than I am. I'm very confident about it, so I would prefer to buy longer term in the money calls. And I'm going to show you how to find stocks where that would be appropriate. Some of you might still say, yeah, we could still see some nervous jitters in here. And so I want to make sure that, the stocks that I'm picking, I'm selling out of the money. Bullish put spreads. Okay, that's fine. You have to go with your level of confidence and your risk tolerance. So normally I would go through and I just start clicking through all these charts and saying, let's take a look at green royal flush. That's my favorite swing trading search that we have. All of these searches that I've put together for you, these are our favorite searches. There's so many different variables that we use, and there are so many different settings that we use, even for typical indicators, that you could try and come in and replicate this, but green royal flush, you're not going to be able to because you don't know what goes into my buy or sell signals. But this is bullish across every timeline. So from M15 to D1, across every timeline, this stock has a bullish trading signal. Well, confirmation over multiple time frames is a very powerful tool. Hey, look at this. Our automated trend lines are actually giving us a beautiful little breakout here. Ooh, I like that. Look, we have a compression breakout. That's nice. I didn't even have to go into this search, but the top symbol right there. Okay, you know what? I really like this. Earnings not until February. I love this breakout right here. I think MSTR is going to continue to go. Gorgeous, gorgeous stuff. Look at that compression in there, which actually I'm going to look for compression. You can see 1-0 squeeze right there, yellow dot, compression, green dot, breakout of that compression. All right, so really nice stuff. Take that off. Lulu. We're going to mine for stocks in just a second, so please bear with me. I just want to take a look at some of the top prospects here. You can see Lulu had a very nice breakout here also. Longer term, very long term trend line breakout right there. Compression, high plus breakout, earnings after the close, really good stuff. I'm not as crazy about buying retailers. They tend to be hot and cold. AVGO, okay, so we've got this nice high plus trend line in here. Let's take that off and let's zoom in and see what this one's doing here. And we can see that the stock has been compressing in a fairly wide range. And so it did break out, and now the stock has come back and it's tested this horizontal breakout right in here. Okay. I also have the major moving averages I can lean on. So I've got the 100, this blue line. I have the AVWAP-E, that's another line of support. I have the 50-day moving average. Okay, that's good. And I've got horizontal was resistance, is now support at 920. Okay, that's cool. I have a downward sloping trend line here that looks like it could be a little bit of a bullish flag formation. Okay, I have earnings that were announced after the close on Thursday, and I have a positive reaction on Friday. Ooh. Look at that volume. Oh, yeah. I think somebody wants to buy AVGO. Uh-huh. I love what I just saw there. So, okay, now what do we do? Let's see if we can sell a bullish put spread keying off of these major support levels. So ideally, we can go down to the 900 level even. You can see the low there is about 903. So still above 900. So I'm going to put up trade here. I'm going to take a look. What do I think is going to happen between now, December 10th, and December 30th, the end of the year? I think the bid is going to be strong for the market. I think asset managers are going to be supporting stocks. I am not looking for a big drop in the market. So everything looks pretty dang good. So why don't I go out to the December 29th strike price, okay? That's about 3 weeks. I like to keep my bullish put spreads 4 weeks and in so that I can take advantage of time premium decay. So if we sell the 900 put and buy the 620 put, we can see, let me refresh this, 40 cents bid offered at $1.70. That's where that spread is currently trading. What would be the middle of that range? $1. All right. $1 credit for the 900, 895 bullish put spread. Am I going to get filled at $1? No, it's right in the middle of the dang thing. So if we get any little pullback at all, on Monday, yeah, you'll have a good chance of getting filled on that spread. Well, Pete, The bid-ask spread on these options is so wide. I can't go into a spread like that. How will I know if I can get filled? What you have to worry about, and you're not out there trading 1,000 lots, okay? Most of you are probably out there doing a 5-lot spread, 10-lot spread. Okay, so you don't have to worry about liquidity as much as long as you are getting the price that you want. That's the most important thing. And if you look at the probability of success on this, given that you've got horizontal support, you have major moving average support, you have AVWAP-E support, you've got a bullish reaction to the earnings announcement. So the earnings announcement is out of the way, and you have a market that is moving higher, and you have a market that is not likely to have a big sell-off between now and year end. Checkbox, 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 checkbox. So you put the spread out there and you see if you can get filled on it. And if you are, you've got a very high likelihood that nothing bad is going to happen. And that will generate a 25% return. So it's a 5-point wide spread. I'm bringing in $1. So my max risk is $4 and I'm bringing in $1. $1 divided by 4 is a 25% return. Pete, why would I want to do a trade when I can only make $1 but I'm risking $4? Well, if your odds of success were 50-50, you wouldn't do that. That's a foolish bet. But when your odds of success are 90% or higher, that's going to be a successful trade? Yes, of course you do the trade because you have a positive expected value for that trade. And I've given you all the reasons why I think that's going to be a good trade. So now let's shift gears. I've shown you how to sell an out of the money bullish put spread. Let me show you how to mine for some stocks. So yes, love all of our searches. I use them all the time, but what I don't spend a lot of time on is showing you how to mine for stocks. So what are you looking for? That's the main thing. You have to figure out, what the hell am I looking for? So when people tell me, I'm not very good at this, I don't really know how to search for a stock. Well, what are you looking for? So let's open up custom search. For those of you that have Option Stalker Pro, God, I hope you're spending some time in here creating some of your own searches. You know what it is that you like in a stock. Okay, so run some searches and go find it. So we showed you a bullish put spread that we like on AVGO. Let's shift gears completely. Let's look for an option buying opportunity. All right, so first we're going to go in and we're going to select decent option liquidity. So maybe we use a -2 value here. That's going to be very liquid. Anything -2, you can get 10, 20 contracts done. You start getting above 1, you're going to start getting into some very liquid stuff where you can probably do up to 50 contracts. You get up to like 5, you can start doing 100 contracts there. You get up to a value which it maxes out at 15. You get a value above 8 or 9, you can probably even do 1,000 lot. So anyway, we don't need to go to 1,000 lot. Let's make sure that we're casting a wide net, which is something that's it's an important concept. Cast a wide net, see what comes in, see what you catch, and then draw that net in to get closer and closer to what you're really looking for. So option liquidity -2, okay. Now I want to buy options, okay? So I don't want there to be a lot of option implied volatility. All right, so typically, I mean, this can be 1. You're not going to find anything with a 1, but option implied volatility of a 0.1, you're probably not going to find anything there either. But that's the lower bound, so we don't really care so much about that. 35, 0.35 and higher I would consider to be fairly neutral. 35 is kind of neutral. Anything above 35, I would consider to be relatively expensive. Obviously, if you're getting to 0.45, zero point 0.5, yeah, those are expensive options. So we want nice, cheap options because we're looking to buy longer term calls in the money where we have very high delta and not a lot of option implied volatility. So we're doing the opposite when we sell bullish put spreads. There, we want to have that high option implied volatility because that gives us lots of cushion down to that short strike price. And that's why we want to make sure we've got multiple layers of support. So now we've got two criteria here. Let's take a look. Let's just see what's out there, okay? Liquid options, fairly low option implied volatility. Yeah. Okay, that is a very long list. We're not going to pound through all of that. And if I really want to focus on stocks, then I'll click no ETFs. Okay, that's going to reduce the list somewhat. All right, well, what else would I like to see? In general, what am I looking for? Am I looking for something that is rock bottom? No, I kind of like to at least see the stock above the AVWAP-E. All right, let's mark that one. Okay, a lot of candidates. I don't need to be clicking through all these, do I? Really? No, I don't need to do that. So let's see if we can narrow the list even more. Let's take a look at stocks that are strong relative to the market. Well, that is our trading edge, so yeah, that would be nice. Okay, now we're getting a little bit fewer candidates here. Let's take a look for a stock that had a new buy signal in the last couple of days. So I mark new and D1. Okay. Ooh, that reduced the list dramatically. Maybe too dramatically. So let's not include that. I mean, we could take a look at these and see what's on there, but I'd rather have a few more charts to look at. So as long as it's on a buy signal, I'm okay there. Now here's something that's interesting that we can use. How about a compression breakout? And there, a new compression breakout would actually be good. So the stock has been compressing, 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 and in the last 2 days, we have a compression breakout. All right. Now we've got some pretty decent stocks to take a look at. So all of this looks pretty good. And let's take a look at these three stocks and see if we've got anything that really strikes a chord with us. But this is a very short list in here also. So let me see if there's anything that I can fine tune. And maybe that AVWAP-E we don't necessarily have. Let's see what we do if we remove that. Didn't really change our results much. Just hoping to get a few extras in here. But let's take a look at these and let's see what we've got. Mark that again. All right, so I'm going to move this off screen. We're going to take a look. Let's see what we snared. So we've got this stock, DB, nice rally, patchy. When I see patchy stocks like that, it tells me that it's an ADR, which it is. And this is Deutsche Bank. So we'll go to the next one. Qualcomm. So we've got this nice rally. There's your earnings announcement. Blows through all of the major moving averages. Okay? AVWAP-E, nice. Stock hugging that EMA 8, okay, so it's not too far ahead of itself through this horizontal resistance level. Only issue with Qualcomm is that it does tend to be very choppy. So let's zoom out. You can see real choppy. What's it done on a longer term basis? Well, real long term basis, you can see that the stock has actually been in a downtrend. So this is definitely a tech laggard. And let's go back to the normal view and let's add our trend lines and see if there's anything breaking out there. There is. So we can see that breakout there. There was an earlier breakout to this line right in there, but we're out of range to see that because it intercepted in here from there down through here, came into here. So it's more than 10 days old, so that's why you don't see it on the chart. So it does have multiple breakouts here, and let's put up one of squeeze. Yeah, there's our compression. There's our compression breakout. Nice. Okay, and we know that Qualcomm tends to have fairly cheap options. So maybe we can buy a 130 call option on a stock like this. So let's take a look at those. And we'll go into, we want to give ourselves as much time as we can. So maybe we'll go into a February options expiration. Give yourself time. Let's also hover over this E here. So 12/1 is the expected earnings announcement date. So these options would actually span that earnings announcement. Okay, cool. Well, let's take a look at those in the money calls. And if we go out to that date, because we are spanning earnings, you can see they're fairly expensive. So the 130 calls, which are $3 in the money, are trading at 9. The 125s, which are in the money by about 8 points, are trading at 12. So you're not going to get that really high delta on these because Qualcomm does carry some pretty decent option premium and we're spanning that earnings announcement. So I like it. It's a choppy stock. Here's STX. Let's see if we can find something a little bit better. So there is a pretty major resistance level and a compression that we're trying to break out of. So that's pretty good on STX. WFC through the downward sloping trend line right in here. Let's zoom in on that. That actually doesn't look too bad. You've got your little compression right in here, got a nice little breakout. We're able to finish above that downward sloping trend line. Okay, not bad. Financials, I've liked financials. Financials have actually been quite good recently in terms of market strength. So I'm going to just take off that new compression breakout because I want to see if I can pull anything else in. 4 candidates is just not a lot for me to take a look at. And so this had to happen in the last 2 days. That's not giving me a lot of time. So now I'm going to just fly through these. I'm going to see if I can see anything better. We know we've got the option implied volatility that we like. So ABBV, just flying through because I know I'm getting a little bit long here. This is nice. This is CCL. That's a good breakout right in there. COF. That is a really nice resistance level. That is going to be a nice breakout too. COF actually looks pretty doggone good to me. Yeah, I would definitely take a closer look at that. Costco. Now you're seeing, I mean, these are all good candidates. They have low option implied volatilities. You can see that they're all breaking out through major resistance levels. That is a nice high plus breakout. There we also have a nice breakout right through here. You can see Costco actually looks pretty dang good. When you start looking for stocks and the market is bullish, everything starts looking good because you're trending higher. But that's also the nature of the searches is when you start seeing a bunch of candidates in the bullish searches and hardly any candidates in the bearish searches, then you know which side you're supposed to be on. You're supposed to be favoring the long side. God, I really like this chart. Look at this horizontal resistance we're breaking out through. So, man, I do like DHI. That looks like a really good one. I'm just going to scroll through the list and see if there's anything else that kind of catches my eye, but DHI looks doggone good to me. I love the breakout and I love the follow through here. I mean, this is such a solid breakout. So let's see, they're going to be fairly pricey because they'd be $8 in the money. Let's see what we can buy time wise. And we can go out a couple of weeks. Right now we've got earnings. We're November 7th, so probably February till the next earnings date. So let's see if we can go out to February. And we want to go past that earnings date if we can. And so now we're looking, stock is at 138. And the 130 calls are offered at $13. So you're going to be paying about $4 plus over. So yeah, you're paying a fair amount for these. I mean, if you're more conservative, you can even go out into January and then perhaps sell a bullish put spread keying off of this. I was hoping for slightly cheaper options than what I'm finding here. So maybe I just keep looking. But I do like this. I really like that breakout. Would I day trade the stock? Yeah, heck yeah, I would. Option buying, going to be more difficult. TSN, that's a food producer. We could take a look at that. I'm going to stick with DHI. I just really like that stock. This is a nice downward sloping trend line. This is a good breakout to the upside. You're above the 100-day moving average. I think the food producers are going to do well in here. You're a little bit capped off there. Yeah, DHI, what the heck? I like that. CVS I see on this list also. This is a stock that I highlighted last week. Look at that baby go. Love it. Really nice breakout there. So, yes, if I were going to buy premium, I just not finding anything with that cheap premium. Let's see what we got here is UBS. Yeah, nope. All right, I'm just going to click through a few more of these. I'm just trying to line you up with something that looks good as far as not overpaying option implied volatilities and finding something in the money. Sorry it's taken a while, but I'm doing this as I would normally be doing it and going through the searches. So I can't spend as much time on each chart. KKR, that looks nice. I love that breakout compression. Now it's starting to go again. It's a financial. I really like that. That one could work. Does it have some decent, cheap, dang options? That's what I really need. All right, let's go into a Jan expiration and see if we can get something halfway reasonable in here where we can go in the money. Wide bid ask spread. So I don't particularly like that. 72.50s, those are in the money by about 550. So not too bad on those. Not too bad on those. Those actually could work. And these bid ask spreads, these options should be liquid, and you can see, and sometimes on Fridays they will widen out these bid ask spreads. That's what the market makers do. But as you get closer to the money, you can see that they tighten them up very nicely. So you just have to work between the bid ask spread to get what you want. But if you look at the $70 calls, there's 730 bid offered at 8. Even at $8, you're paying $1 over intrinsic value, and you don't have to pay $8, okay? Take a look at the price action on Friday. Nice move higher, grind, grind, grind. Decent volume in the close. I would hope to see a little bit better volume in there, but yeah, this has been a nice move higher. You've got this gap. This stock is starting to catch on. So this is a financial, but you can see it's got some pretty dang good traction. So yeah, I think that one works. Overall, I got to give you a pick. I was trying to show you how to mine for cheap options, and I unfortunately am just not able to find any good cheap options where I can get that high delta and only have to go 2 strikes in the money. So I'm going to leave you with the stocks that I really like. I love that AVGO spread, first of all, selling that 900, 895 bullish put spread for $1 going out to the D's 29 expiration. That one looks really solid to me. This DHI breakout right in here, I like that stuff. This is a gorgeous horizontal breakout. I love the follow through. I love the volume. So I think DHI could work very well for a long position, buying, call, options. Let's just see if we can do anything a little bit shorter term, go in the money, and at that $30 strike. Yeah, you still got a fairly wide bid-ask spread on these, which is the problem that you have when you're buying longer term options. So real quick note on that. If I'm buying an option and I have a deep in the money option and a fairly wide bid-ask spread, what does that tell me? Tells me that I don't want to be in and out of that position very often because I have to navigate that wide bid-ask spread. So why would I want to buy an option that only has 3 weeks worth of life? I wouldn't want to. But if that bid-ask spread is wide and I have an option that is 4 months in duration, well, I'm not going to have to be in and out of it. I can hang on to that for a long period of time, and I don't care about that wide bid-ask spread because along the way, maybe I sell some out of the money options against it, defray it. I'm not in and out of the position. I'm just looking for the stock to be in a longer term move higher. And so for that reason, you don't want to buy deep in the money call options, even if they have a high delta, even if they have low option implied volatility, even if they don't have a lot of time decay, if that bid-ask spread is wide, because you don't want to have to navigate it. But buying a stock like this, heck yeah. So let's leave it at that. See if you can find some in the money options that are relatively inexpensive going out to January or February. Look for this stock to follow through. It's had a nice breakout. I'm looking for it to continue to move higher. Could it come back and check this breakout here and let that EMA 8 get a little bit closer? Yep, sure could. Is there a bullish put spread in there? I should check very quickly, and let's see if we can do anything between now and year end on that December 29th and get any kind of credit down around that 132 level, which puts us in around the breakout. So 132, 130. I'd need 40 cents for that. Right now I can only get 20. It's 20 cents bid offered at 40. Yeah, I would do that spread with 3 weeks left, but you're going to have to see a little pullback in the stock, and I don't think you're going to get one. I think this stock is one that I probably would like to day trade on Friday because you got that big volume right there into the close. So that's what I've got for you today. I'm going to be doing a live event on Wednesday. Everyone really seemed to like that, so Harry will join me. We'll be doing it during market hours. I think we're going to try and do more of them midday, so like 2.5 hours after the open. And please post your questions ahead of time. You can do that in the OneOption chat room. We'll try and get to as many of those as possible. And I wasn't great about looking at the chat while we were doing the live event the last time, but I'll make sure to do a lot more of that this time around. So I'll be watching as you post your questions and I'll make sure to try and get through them. Long video. I hope this has been super educational for you on a number of different fronts. So look for us to continue to do that in the live event Wednesday, and we will see you then. Thank you.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.